Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups. And our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we've been doing these free mentoring roundtables forever, really. This is the 685th session. We started doing this as an experiment back in 2008. And that experiment obviously was a success. And now, over 300,000 people have participated in these sessions, and it has gone on. Basically, in our life, in our, daily life, we're kind of here doing roundtables almost every week. Maybe in the, 52-week window, we're probably not here 4 weeks of the year, but we are here almost every week otherwise. Today, we're going to begin the session with a conversation with Manu Rekhi of Inventus Capital. And we have, every week almost, we have a guest who's typically an investor throwing light on what's happening in the industry. So there's entrepreneur pitches that you share your ventures and we do mentoring. But I also invite people who are actually writing the checks to share with us what they're seeing, what they're investing in, what kind of investment thesis they're working with, so that you can get perspective into how investors are thinking about the current trends. Welcome, Manu. Great to have you here.
Well, thank you, Shamana. And you've been doing this for 17 years, but looks like you haven't aged a single day.
Oh, that's very nice of you. I've aged plenty. So, Manu, let's start with, we have had Inventus here before, but we haven't had you. So if you could introduce yourself a little bit, whatever you want to share with the audience. I know you, of course. That would be a good start, and then we'll get into investment thesis and so on.
No, absolutely. Thank you. We've been doing this for now 15 years, at least with the firm. I was prior to this mostly as an entrepreneur and operator. So I did a couple startups, and I was at Google in the early days, and investing became part of it while I was still operating, and then sort of fell into this almost by accident. I said no for 5 years, and I finally said yes. And it's been fascinating. It's, there's nothing more exciting than spending time with very optimistic founders. Every day is different. It helps my ADHD quite a bit by having to switch context all the time to be able to help founders. And all of our team members have been engineers and have actually built companies in the past. So we're founders who have become investors. So more than anything else, we understand the background of what it takes to build something. We call ourselves dream merchants more than VCs. Somebody has a dream, and we're willing to buy the dream. Maybe I'll stop there, and then we can sort of get into Q&A.
Yeah. So Manu, I think at the moment in these roundtables, the discussion that we are focusing on, of course, we could talk about all kinds of things, but I think the most contemporary discussion is about AI and what's happening in AI. There's lots of confusion. There is lots of trends to discuss. So let me start us off with your vision or your perspective on how you are investing in AI. What is the firm's investment thesis vis-a-vis AI?
Sure. We've seen this music play before, whether it was the internet revolution or the cloud, mobile, social, and AI is just one of many trends that have the underpinnings. So at the end, for enterprise especially, it is about productivity gains, right? Is it a tool? Is it more of a hype, right? If it's improving productivity, and these things take time, we're in a hype cycle. We've seen these hype cycles before, but I think there is, unlike blockchain, which was truly a hype cycle, and still, it may make fundamental changes, but the promise wasn't delivered. I think with AI, it's been worked on for more than a few decades, right? And I think this is the culmination of lots of work over many decades. And there's still a lot more to go. So we're actually very excited. I think there's fundamental productivity shifts. Last year, lots of CIOs and enterprises were making sort of experimental budgets, trying to figure out what to do. I think this year, next, I think there's actual budgets being moved into this, and you're seeing pretty impressive rise in companies, and so it won't just be Jensen Huang and Nvidia making all the money. I think there'll be lots of companies that will sort of come out in the next few years.
Yeah, and I think the difference between blockchain and AI is that AI is more akin to the SaaS revolution, in that SaaS basically changed the architecture of all business workflows. And I think AI is going another rev into the business workflows and changing those workflows, creating tremendous productivity gains. And I think in due course, it's going to be real automation coming through AI, which is what makes it so attractive. And we kind of know how to invest in business workflows, whether it's enterprise or mid-market or small business. Investing in businesses that enhance business workflows is something that Silicon Valley knows very well how to do, India knows very well how to do, Europe knows very well how to do, and that general thought process is what's playing in AI. With one exception, and let me ask you what you are seeing and how you're processing this exception, which is usage-based pricing, right? SaaS became so popular because it was subscription pricing. And subscription business models are very attractive to investors, whether it's public market investors or private market investors, extremely popular because of its predictability and the fact that it's recurring. So you book something, it stays on the book, and then you add on top of that, and that stays on the book for years and years and years. So from a P&L point of view, it's a very attractive model. But usage-based pricing does not have that same level of predictability. What are you seeing?
Yeah, you're correct. I mean, I think predictability is important. I think as more budgets get shifted, as CIOs and CFOs, especially CFOs, because they're the ones who want predictability. Yeah, even going back to the SaaS world, the founders found a solution that I could do monthly pricing and his seat license, and it was easy to predict. But most VCs actually insisted that you should do 12-month contracts, right? So they were still, paid up front. So I think, even though it was built for that flexibility, but cash was important, and most companies ended up doing annual prices and pushed customers to do annual license pricing. So it was sort of similar to the previous models as well. So I think there'll be multiple ideas that will come through depending on the solution you're solving, right? For example, I'll give you an idea. Like, I've been talking to a company we're looking to invest in that does sales automation, actually makes the entire sale happen from finding the leads to actually making the phone call, closing the lead, and actually booking the revenue, right, all the way through, right? Now, what the founder has come up with is like, hey, I will charge you X dollars per month, just like an employee, right? And this person, the number of phone calls you're making, you can count the number of hours. There's 40 hours a week at the regular employee works. I'm going to charge you accordingly, right? So there is predictability in that thing, right? It's $1,000 a month, for example, and I'm going to work 160 hours a month, and that's my pricing, right? You may be paying $5,000 or $10,000 for a sales person, and then commissions on top. And so I think in that situation, that pricing model works well.
Yeah.
Right. But if you look at agents across the board, if I can do 100% employees work, I can't just charge you for one thing. So I think other models, for example, I have a minimum pricing, and then I have usage on top of that. So I can predict, I can buy these bands, right? I can buy 10,000 credits, and if I consume the credits, I could buy more credits, or maybe I have a floor and something else. I think there'll be, pricing, I think, is separate than the value being delivered, right?
Yes.
If I
Well,
can predictably,
but pricing is derived from value, though.
Yeah, exactly. So I think there'll be experimentation. I've seen lots of different ideas coming through, and then it could be like, hey, well, you pay for your processing power, right? Whatever, you use your OpenAI license or your Gemini license, and then I'm going to charge you on top of that so that I'm not taking the cost of the underlying model cost, right? So I've been seeing across our portfolio all these models being tested. And I think, 2 or 3 will come through, but usage-based is not new. This is how we started, right? When you look at supercomputers, if you wanted to buy time, how many hours, how much usage you had, cell phone pricing in the 1980s and early 1990s were all, usage-based. The number of minutes you called, the text, you were charged accordingly. So in some sense, I think we've seen this music before, so it's not new. And
Yes.
it's
But there
it's
has been if you look at Wall Street likes predictability and in revenue recognition. So it's not like the cell phone companies get valued at the same level as the Atlassians and the ServiceNows. So yeah. Okay. So let's talk about the type of AI companies that you are investing in, and we could do some case studies first of what you have invested in, and if you could share with us in what stage and state you encountered these companies, and what is it about them that made you write the checks?
Sure. I can maybe give you a couple examples and go into it. So a company called Scientific Space, and we typically invest in pre-seed or seed. So that's, it's usually a couple of founders, maybe they have a better product working, some early product market fit, or just a PowerPoint slide, depending on where we encounter them. We do mentor founders sometimes for weeks or months, just to sort of understand where, them more than the product. So getting hastily into bed with somebody else is not our style typically, right? We do like to marinate, understand. So in this case, the founder was building a very AI native application to help researchers, whether you're in pharmaceuticals or in a laboratory or in a engineering company. Typically, you would have to go through thousands and thousands of articles, figuring out what body of work has already been done, and then trying to figure out how do you build the next piece, right? And so everything from protein molecules to the next AI models, right? And there's millions of published articles every year, about 2 to 3 million. And so the body of work you have to go through, the languages, some things in German or Italian or French, and so what would take weeks and weeks of work, sometimes months, is now getting done in minutes, right? And because they're very finely tuned to research and pieces, their quality of work is 10, 20, 100x better than any large language models, because large language models are very horizontal. This is very specific down to that body of work that's being researched. So that company, I mean, the ROI is very meaningful. They've gone from 0 to $8 million in ARR in a very short period of time.
And when you look at a company like this, that is essentially a vertical AI company, is it built on top of a particular LLM that's off the market?
Yeah, so they initially built their own large language models, and then they have substituted that for models as they've sort of come up to par, right? And so rather than spending your R&D dollars on building those models, but they focused on more the small language models and tuning on top of that stuff so that they have differentiation besides that.
And what is the degree of defensibility and how do you gauge that degree of defensibility when something is built on top of an off-the-shelf LLM, but is focused on a vertical application?
Yeah, so I mean, you're using the large language models off the shelf that are more for once the results are done to be able to publish the content, right? But the actual reasoning and stuff is actually being built on the data sets they have and the analysis and all the other pieces that are built on top. So that's one part. So your proprietary access to data and pieces that the large language models don't have. So that's your data moat, right? And the other part is about the workflows that researcher needs, right? So it's not just the fact that I need to get that research done. I need to figure out, the workflows, collaboration with other researchers, I need to be, so for example, if I have questions on that article that I just read, well, can I get in touch with the author of that article? It's actually a social networking site also being built underneath it. I need to be able to collaborate, maybe even hire, other pieces. So there's a whole bunch of other defensible sort of pieces that come through. So the actual reasoning and stuff is just one part of a much bigger workflow.
Yeah. Okay. Let's do another one.
Yeah. Another company, LiveSite, very boring business. They're actually in project management, native AI for project management for large construction companies, right? Imagine you're building a tunnel or a high-speed railway train from Ahmedabad to Bombay, for example. That's a good example. Yeah, you'll have like a few hundred project managers that are making sure that every part of the project is actually getting done, right? And if one piece of steel is delayed, well, that slows down everything else, and there's a lot of cost delays and lots of fines involved. So this company basically replaces all those human project management labor in between, and instead of a 200-person team, you can do the same thing with 10 or 15 people, and the software does the rest. Now, just to show the value of this, I mean, their last contract was $5 million plus in India, right? And so the customers are seeing actual real value, and they built AI native up from front. So it's not sort of retacking what the traditional SaaS software workflows. So this reimagines the entire workflow very differently and actually delivers that value. So they're getting really good, hard, large contracts from places in the world that would never pay that much money.
And what is the AI angle in this? How are they using AI?
So, they built their own the data sets, and they've kludged together multiple different LLM multimodal models to be able to make sense of this the whole pieces. But it's the actual training sets of having done this with thousands and thousands of other project managers to be able to figure out what works well. And then using, instead of a linear process, what all Gantt charts do, right? It's like, if I do this, then this is what happens next. They do circular workflows. So anytime one thing is delayed, impact over everything else get reassessed very quickly. Whereas the traditional charts would require a lot of human intervention to sort of use their judgment to fix things, right? So all the previous knowledge of judgment on how things will impact the downstream effect of a project can now get done in seconds with the AI models, right?
Okay, interesting. But more of a workflow though than the LLM kind of application. This one is real workflow. There's a tremendous amount of real workflow management going on, which is defensible. Vertical workflow is defensible.
Yeah.
Manu, I know your firm has a particular emphasis on the India Silicon Valley corridor. Could you talk a bit about how you work with founders and, geographically, how do you like them to be configured or approaching you and so on?
Yeah, absolutely. So our thesis had been with the India-US corridor. So whether the Indian founders moved to US for university and then they stayed on to actually build a company here, or they stayed back in India and built a company. So it didn't matter where you ended up at. Now, we do seriously prefer companies, even if they're built in India, that they're US headquartered or Delaware. The legal structure in the US is far simpler. If your designs, and we prefer companies that are building for the global market, not just for the India market, because India software market is still, it's a decent size, is growing, but it's nowhere close to the global, the US markets especially. So we prefer our founders to have sites here as well. We don't do much consumer domestic in India because those the companies can stay in India, and so we had a sister company in India called Athira Ventures, and so that's how we split up. So we focus more on global Indian
B2B, B2B. Global B2B is done out of Inventus, is what you're saying.
But we also do consumer companies as well, but they're focused globally as well. But they're mostly US, founders like Poshmark, with Manish was based here, right? We have Flam, the founders might be in India, but they're moving here as well. And that's a sort of a consumer slash B2B, B2B2C company as well.
Okay.
So we'll make exceptions, but our traditional is probably 70% enterprise, about 25% is consumer.
Okay. And what are you seeing in your deal flow? We've talked about what you're investing in. What trends are you picking up from your deal flow? Whether it's Indian deal flow or US deal flow, what are you picking up?
Yeah, I mean, almost everything has been repackaged as AI, and so, yeah, I think going through just a simple wrapper on an LLM to defensible moats, and it's also as the underlying models are improving, a lot of these moats that may be relevant today may not be relevant 6 months from now, right? And I think so. There's a difference, and trying to sort of tease those out. And by the way, this is no different than some of the work we had to do when everything became blockchain all of a sudden overnight, or everything became social or P2P sharing right now. So I think founders are very good at changing or repurposing what they have to what the trends are available in the market, right? And I think it's differentiating between things that have real legs versus something that may not be valid a few months from now. I think that's what our job is, but it's not like we'll always get that correct, right? Because it's not just the foundational models, whether it is today is OpenAI or Gemini or Anthropic, but in the previous world it was other platform providers that also had the same thing, and as they would add more features, it would kill companies or they would acquire them. So I think we have a large group of people besides our core team that get really involved with our startups and diligencing actually recommendations. So we have like I said, we always have this focus on spending and mentoring founders and really getting to know them beyond just the business plan.
So a couple of thoughts based on what you said. One is we're hearing a lot about human in the loop and AI services. And my read is that this is actually a strength for the Indian founders, because India has had a long history of building services businesses. So if you have to layer on top of your core IP a services arm, that is easily done in India, and there's a lot of management, experience management and so on available. So that's one trend that I have seen. The other observation I'm picking up is, the workflow moat or the domain specific stuff that are particular to that domain, including certain databases, like if you have a marketplace of sorts, you have all kinds of AI stuff happening within that, but the real value of a marketplace where people who can transact on certain things are present, that is a moat, right? A marketplace where transactions are happening, that is a moat. Workflow is a moat. If there is a certain kind of workflow that is happening that is specific to that domain, that is defensible. And those are, in some ways, those are much more defensible businesses than a pure wrapper around OpenAI.
Yeah.
So I think for those of you who are listening and who are, starting to think about how you position your companies, keep these nuances in mind so that you build something defensible and don't get sucked into the next rev of the LLM itself that the large companies are going to inevitably invest in and make happen. So don't become a roadkill to LLM upgrade. Okay, so let's listen to some entrepreneur pitches, Manu.
Yeah, I'd love to. Thank you.
So folks, quick expectation setting for those who are pitching today or in one of the upcoming sessions. This is a safe working session. There is no agenda other than helping you, think through your roadblocks. So this is an acceleration conversation, strategy conversation, but it's not Shark Tank. We're not trying to entertain. This is serious business. And if you disagree with the feedback you get here today, that's fine. It's your venture. You consider the feedback and you decide what to do with it. And that's fine. Philip, you are going to go first. If you could please unmute your line and get going. Yes, we can hear you.
Lovely presenting today. So I'm Philip, live in Cupertino, and we've got our office in Menlo Park. And a quick note about me, and Manu worked in India for about a decade, about 7-8 years before moving over stateside and been here for more than a decade now. Experience spans both product and technology consulting companies, but my last gig was at Google, building generative AI before the world was talking about generative AI, pre-ChatGPT days on the Lambda models. So what we do at Techjays is we help the businesses of the world build AI. And specifically what we've seen is that mid-market companies who seek AI transformation love us, and that is where we're seeing the most stickiness and the most happy customers. Our value prop is the easiest way people understand us is like, hey, we built AI inside of Google. We know to build solutions that actually deliver measurable ROI, and we understand what it takes to productionize AI, and whatever industry challenges that you might have. And we thrive in this intersection where business of intersection and technology. That is our value proposition. We're seeing a lot of demand for that, and we've grown to a company of about 170 plus people. Mostly India.
Keep going.
Yes. Yeah, next. The clients we're built for, what we've seen is that companies from lower middle market to even upper middle market, like $1 billion plus, are mostly neglected by all of the big players who are all chasing the multi-million-dollar deals across many years, and they need to build solutions that they don't have a long time frame to have a large consulting engagement to actually do a discovery and then a proposal and then implement. Many of them want to build solutions, showcase to everybody, whether they're private equity owned or they are board, and also, hey, what the leaders see that if they can build solutions that deliver a real good experience, whether it's for their internal users, external users, and deliver, with ROI, have measurable ROI, they're very, very happy. So we work across, in all of these companies, C-suites. Some are like business owners in the tens of millions of dollars, engineering leaders, and AI solutions that work, guaranteed, is our pitch for them.
Philip, can I ask you a few questions to get some vital statistics quickly assessed?
Absolutely.
So how many customers do you have? You have 170 people. How many customers do you have?
29 customers right now.
29 customers. What is an average contract with the customer? I don't know how you charge, but whatever way you present that metric.
Yeah, typically 100 to a 200K, 250K.
100 to 250K, okay.
Yes.
And you have a bunch of different verticals listed here in the 29 customers. Is one heavier than the others?
We're kind of, and I think the next slide answers it. We're very organically grown. Like, I'm the only person who drives sales.
Okay.
And
so you're taking what you're getting. right now.
Yes, they're taking what we're getting. Exactly. And so we've spread across all of them. For example, healthcare, I can say like we have 6 healthcare customers, and a lot of them towards the digital health space. We've got 4 logistics customers, and then that too because of, referrals and the like. So we're kind of spread across.
And is
Um,
there any synergy in the kinds of solutions you're building? Is there any leverage across the portfolio?
we're seeing synergies around use cases. For example, say because we build.
That would be great. Synergy is good. Use case synergy is fine. Go ahead.
Yes. So use case synergy. So let me see. See, we build AI solutions all the way from, hey, what does it take looking at the data? What does it take to clean data? What does it take to set up data pipelines? All the way up to, say, model optimization, model distillation, and the likes, right? So what kind of synergies that we've seen are there are specific problems in data cleaning and data pipeline setup that we've seen across all of our AI implementations. Or like, for example, a very typical use case that we found while building knowledge bots is like email data cleanup and setup for internal knowledge retrieval.
Okay.
So
Well,
we
data cleanup, data setup is a very horizontal problem. So yes, you're going to see lots of leverage. Okay, let's go to what brings you here.
Yeah, well, it's like, so this is because, we've organically grown, we're growing fast, and there are 3 kind of questions that I have. Like, where's the real go-to-market leverage for, mid-market players? What are things that we can be doing to scale from a sales perspective? And what you've seen, would love your thoughts.
So I'll answer and then I'll hand it over to Manu to answer your question. If you want to build a productized services company, you're going to need to, we have a track in 1Mby1M that we call bootstrap using services, and we've been very successful with that track. And not only we, the industry in general has been very successful actually in building bootstrapping to services, bootstrapping using services companies. And as we were talking about earlier during the conversation with Manu, there is a big human in the loop AI conversation that is happening, and the AI services companies is a big opportunity. So typically what happens in the bootstrapping using services methodology is that you start figuring out where is the leverage, and this is why I was asking you about leverage, right? Where is the leverage in the use cases, and then start productizing those use cases, and then start positioning around those use cases. So AI services for the mid-market is a very broad positioning.
Yep.
As you start to develop your go-to-market strategy, we're going to start to get much narrower and much more precise on what is the real value proposition, and then build your entire business around that. That is going to be the general trajectory of a bootstrapping a product company using services. And you'll probably still be 30-40% product services company, but it's going to start to productize as you build towards that kind of leveraged services. Manu, you want to answer?
Yeah, no, I think you nailed that. It's in our opinion, yes, services has this drug about getting paid for every hour you put in.
Yes,
it's a very strong drug. And unlike in product where you may spend a year and a half in R&D, and so the incremental cost is negligible, but you have to put the money up front, right? Whereas what you're doing, which is it's different, is building the product from there has inherent constructions within the company. Now there are people, as Manu mentioned, that sort of make that pass through and build products, but I think with AI especially, I think Indian founders do have an advantage with the BPO industry. The workflows over the last few decades has done really well, right? We do $180 billion in global services out of India, right? So that's the strength.
Yes.
Software out of India is only 20 billion, right? So services is the major sort of part. I think the key, as Manu mentioned, is like, what is that narrow focus that can help you repeat the sales process, but also leverage tools from one company to the other, right? And so from one client to the other. The part that I always, concerned about is, where you're taking current workflows and what would have taken, let's say, 500 hours of work and saying, hey, we can do the same work in 40 hours or 30 hours. So your billable hours needs to be different than just time spent, right? Because if it's based on billable hours, then your incentive is not to actually improve the processes. Right?
Yes.
It's just really hard
This is something that services companies have solved, right? You do solutions contracts,
Oh, yes.
Fixed price contracts as opposed to time and materials contracts.
Yep.
And that's what you should be doing for sure, to address what Manu is talking about. Now, a question, I'm going to move to the next presentation, but last quick answer to your last question, do we continue bootstrapping? Yes, you do, because you have no choice yet. You're not yet in a fundable stage. You haven't really created the repeatability that a fundable company needs to show. So until we show that repeatability, you have to continue to bootstrap. We can come back to you after I've gone through the next few presentations, okay?
Cool. Sure.
Varun,
Thank you very much.
You are next. Do you want to turn on your video? Yeah, here we go. All right, Varun, over to you.
Hey, thank you so much. Just like you said, Shavana, I'm pitching today basically to get feedback and to jot down all the questions. So that's the intent. So it's quite interesting. In fact, about 4 years ago, 2021, I had just moved to Dubai. So I had sold my first venture. It was a digital agency back in India just before COVID hit. So we were lucky there. God was kind. And post that, we moved to Dubai. Wife got a good project. We moved there. And after about 6 months, again, the itch started. And we started a clean beauty marketplace, a clean beauty e-commerce marketplace in Dubai called Secret Skin. And while I was raising so this was the second venture, while I was raising for, this one, I actually went through the same, hoops that I went through when I was raising for my first venture about 10, 11 years ago. So nothing had changed. And it was a little frustrating. At the same time, it was sort of a light bulb moment that we do need to do something to help new startups, to help new founders get the initial few $1,000s or few $100,000 easily and in a much better way. And I started to research that what are the other avenues available. Crowdfunding caught my eye. So while I was aware of Kickstarters and Indiegogos and all that, but equity crowdfunding specifically was something new to me at that point of time. And that was the time I fell sort of in love with the whole concept, where the community comes, the community basically helps the founder get started. It helps them raise the initial few $1,000s, and then as per the traction, then the startup goes. So the whole concept of Pitchlabz was born at that point of time, where we said that, see, in the last 3-4 years, almost $1.5 trillion has gone into funding companies, and out of that, about $100 billion has went into seed stage. But still, raising that initial amount is still an uphill task for every founder today. At the same time, me being an angel investor in some small companies, as an investor also, it was a frustrating experience to sit in long Zoom calls, then get just a chance to answer 1 or 2 questions. So as an investor also, I was not able to get a feel of the founder or of the startup in that one meeting, after which I was asked to make a decision whether I want to invest or not. So that's when we decided that, it's the time is right. Let's focus on starting an equity crowdfunding platform in the region. So both in Middle East and in India, there is no equity crowdfunding platform yet. So Shravana, can you go to the next slide? So, and when we thought about that, when we compared that to buying a house, I mean, it's a much bigger investment. But as a buyer, as a seller, I can simply go online, I can browse the listings, contact the seller or the buyer, and start the whole process. So even at much bigger ticket sizes, there are platforms available. Even at much smaller ticket sizes, there are platforms available. But somehow, this part of the market, which was the initial seed capital, it was still pending. So next
So
slide, please.
Varun, let me address
Yeah.
this point that you're just making.
Yeah.
You know why this is the case? Tell me
Yeah.
why this is the case. You must have thought about it.
Mm-hmm.
Why is this the case?
I mean, what I can point it is to a risk ratio. I mean, risk return ratio.
No, because it's
No.
far more complex and far more diverse. A house is a house. It's a 3-bedroom house, 4-bedroom house, 5-bedroom house. How many bathrooms, what kind of neighborhood, it's a deterministic, parameterized buy, whatever, both. But an equity crowdfunding needs to invest in startup companies. Startup companies are not as parameterized.
Mm-hmm. Fair point.
I think just to take the analogy a little bit further, right? Only 9 out of 10 startups fail, right? Do 9 out of 10 homes fail, right? Yes, it's a conservative purchase, as Manu was mentioning. So I think this analogy doesn't work very well with equity.
I would take this out.
Yeah.
Fair point. I mean, noted.
So let me, I think we know what you're doing, because equity crowdfunding is not new. You don't need to make a case for equity crowdfunding. But why has equity crowdfunding not been successful? Kickstarter has been successful. What is the difference between Kickstarter and equity crowdfunding? Why has Kickstarter been successful and equity crowdfunding not as successful? Have you analyzed that? This is a question. You said you were going to note down the question. This is a question you should research.
Yeah, so I mean, I have my pen in my hand, and it's a good question. So I thought about it. So reward-based crowdfunding as such has been more successful simply because you get a tangible return. I mean, you pay something and you get something at the same time, or at least you have a guarantee, much bigger guarantee of getting something in return. At the same time,
the sweet spot. Just a second. The sweet spot of Kickstarter is advanced product development of physical products. Kickstarter does really well when you're building some product, you put that on Kickstarter and you take advanced orders and use that to build the product and fulfill those orders. This is Kickstarter's sweet spot. This is not how equity, startup investment works, right? Most startups are, especially the world that we operate in, is not physical products. It's all software and kind of.
Yeah, I think the other part, is 92% of tech startups actually never raise capital, right?
And they shouldn't raise capital,
yeah,
right?
they shouldn't raise capital. Like when you come talk to me, or any venture fund, you have to go into a very different growth curve than most startups do. Like I think I tell most founders, I'm like, you know what, you bootstrap it, you build, you can get to $3 million in revenue, maybe 10, 20, $30 million in revenue. And that's a life-changing event for most founders, right? So you don't need to get into a rat race by raising money from venture capital.
And if you do, then you're signing up for building a $0 to $100 million in 5 to 7 year trajectory. It has to be high velocity growth. And most businesses do not have what it takes to build in that mode. So let's say you kind of create this thing and you get a lot of dump money into your ecosystem, and that dump money invests in these companies that are never going to get an exit. They're never going to get their money out. This is the problem with equity crowdfunding. So one of the trends in equity crowdfunding is they try to get deals that are led by professional investors and then open it up to the ecosystem to follow, kind of like, okay, it's a $3 million round. $1.5 million being put in by the lead investor. The other 1.5 million, there's usually a strategic reason why they do that, is that they want to show it to a set of customers potentially and invite them to invest, or getting into a community that has certain behavior. So equity crowdfunding is not new. A lot of things have happened in equity crowdfunding. So this is, you know, it's if you go into this business, please think through where you want to be, how you want to, how you want to position. And these comparables are actually not great comparables. They're great comparables if you can bootstrap your venture. But 12 years to get to $22 million or 14 years to get to $35 million, these are not very good outcomes in venture scale. Venture is 0 to $100 million in 5 to 7 years. Otherwise, you get into problems with the fund cycles and so on. So you're saying investor return 53x, 310x. I don't know where you're getting these numbers from, but these comparables are not, have they had exits? Where are you getting these current valuations from, and what do they mean?
I think this is Crunchbase data. I mean, comparing the secondaries to the initial seed investors.
Anyway, this is my general.
Fair points. I've noted those down. So fair point. The whole idea of at this point of time developing this here is that this region, I mean, as a normal market development, charity-based crowdfunding comes first, then comes the whole reward-based crowdfunding, then generally comes the at the end it comes the equity crowdfunding. So Middle East as a region has seen all other forms of crowdfunding right now. Equity crowdfunding is the only one which is pending, and in fact about 2 years ago, 2.5 years ago, laws and regulations have been laid down for equity crowdfunding in the UAE.
I was about to say there is going to be regulation that you have to work through and figure out what's the and in India the regulation is very strong on this kind of stuff. Yeah,
so in India it's illegal. Equity crowdfunding is illegal.
That's right.
And in fact that is one of the reasons why building this out of Dubai and capturing the India and the Middle East corridor becomes a good way for us to present to other geographical leaders, let's say any bigger crowdfunding company in US or in Europe, to have us as an acquisition to get hold of those geographies also. So that's
I'm not sure if I buy into that. You heard Manu say that most of the investors in the India-US corridor prefer Delaware operations. So be careful about how you set it up, because if a company comes to you for equity crowdfunding, you can't close off their future fundraising possibilities, especially if they're going down the venture track. Then this is going to have to set them up for the follow-on rounds of financing, where they would need to be a US registered company, Delaware registered company most likely. And you have to be able to then fund these Delaware registered company, and you want them to be Delaware registered. If they're India registered, you can't fund them anyway, because if equity crowdfunding is not going to be allowed. So there are lots of regulatory issues that you have to work through. So think it through, whether this is the best thing for you to do, because this is not exactly a walk in the park.
Fair enough.
Okay, so we can come back to you. Let's go to the next presenter, Bharat from Punjab.
Well, while you bring him up, I also share a VC matchmaking.
One second. Manu wants to say something.
Sorry, just a quick thing. Yes, I also shared a link called the VC matchmaking tool.
Yeah.
So I think Varun, when you were mentioning about the mismatch and the pieces, so we've also recognized this as well over the years. So we actually had built a tool internally for our founders to, when they raise Series A and B and beyond, to be able to matchmake them with the right VCs. So we've actually analyzed over 4,700 VCs around the world. And then based on what you're building, who the right people are to talk to, right? So don't spam just because you know somebody or your angel may know somebody else. who are the right people to actually even go have a conversation with that don't have a competitive, they actually invest the same round sizes, are active. It's a lot of information that founders have to go through to sort of figure out who that other person might be. And there's a new venture fund started every other week, right? So how do you know where the money is and what to do? So we actually we have a full-time data scientist, AI that works with us as a partner, and so we built this tool internally, and we're actually making that openly available for anyone to use for free.
Now that, I mean,
So I
seems nice. I mean,
I shared this link internally for you for this as well for you to evaluate.
Very good.
thanks so much.
Sorry.
Okay. Go ahead, Bharat. Let's get going with yours.
Yeah, hi ma'am, how are you? Hi sir, how are you?
Very
So,
well.
good.
What are
Okay.
you working on?
So ma'am, basically I'm working on a product called Lino. This is AI powered toys for children from 2 to 12 years of age in India. Because India being grown to a market where toys have been very traditional from the last 50 years, but now with the change in technology every single minute, so there's a great demand for technology based toys in India right now. So basically I want to pitch my company, that is Lino, where the head of the family is Lino, that we are going to launch in India by this year end. So I just want to take the feedback on the pitch as well, because in India, the main problem lies with the mothers, where they are not just in India, where they are continuously going into depression, fighting anxiety problems, like in their in-laws' house, even in their houses, even with the children sometimes, because their me time gets sacrificed a lot of time, because they find the quality time for themselves, or rather than they have to give TV screens, or even the toys that lies in the market are just like for a days of three, that doesn't go beyond in India. So there we are developing a technology called Lino, where our technology is getting embedded in toys, physical toys, where our toy Lino is directly interacting with children, interacting with mothers, making their daily routines of uh, children very much easier, even playing hide and seek with them, and even playing in the park with them, and even helping in their education purposes also. There are many products available like Lino in US as well, like Moxie, Royb, Cosmos, Noble. There are many products available, but in India there are no such products as of now. But yes, many companies are making these products. Like Miko is one of the product from India only, but these products are very much costlier for them to for the Indian family specifically to purchase. So we are making lives for mothers first much easier, to have the companions on a very safe technology in a companion, where they
So,
can trust.
Bharat, this is
Yeah,
a
ma'am.
lot of text on a few slides. It's the slides, basically your slides are unusable. Slides should
Okay.
have 3 bullet points and as little text as possible. So let me start asking you questions and see if we can.
Yes,
I
ma'am.
understand you're trying to build toys that are technology
Yeah.
toys for the Indian market. So there's a big price component.
Yes,
Have you thought about the segmentation aspects of building a B2C toy business? Like, who is the target customer? Who is the target customer in terms of the child? What age group? What kind of what psychographic? And who is the target audience in terms of the parent, and including household income? You know, what kind of psychographic? What kind of lifestyle? Because all those play into positioning a B2C product like yours.
Yes, ma'am. So ma'am, basically our toys cater from 2 to 12 years of age for children.
That's
We have
too
divided
large a
into three.
brand, right? People, two-year-olds don't play with the same toys that 12 years old do. So that's too long. So, and you cannot, you're going to start with one toy. This is a startup company. So you're going to start with one product. What is that first product? What is the target audience of that first product?
That product Lino has the all the content that is going from 2 years till 12 years. We have divided into three sections, that is 2 to 5 years, 5 to 9 years, and 9 to 12. We have section for each category. Like for 2 to 5, the content is different. From 5 to 9, content is different. From 9 to 12, content is different.
So what is
Yes,
Lino? What is Lino? Is it an iPad kind of device? Is that what you're trying to sell?
it's not a kind of iPad kind of device, but it is a toy only with the AI powered technology embedded in it, where
What is the
Lino will
form
be
factor?
interacting.
What is the form factor? Do you have a slide on what does it look like? What is the form factor of this device?
Yes, yes, it was back in the slide. In the back slide, the design was there. In the back slide. Yeah, this one is the that one.
Which one?
The last one, ma'am. The last, no. The third last. Yes, ma'am. Behind this.
Next one.
Yes, ma'am. Behind this. Yes, ma'am. This one is the design for Lino. The one that
I
you just.
can't read. You can't read this many lines of text. It's going to take 5 minutes to read the text. So you don't have an image of what this product looks like. How come you
image
don't
is just
have
in
a
the next.
mock-up image?
Ma'am, the image is just in the next slide.
This one.
So this is
Yes, ma'am.
what
This
the
one.
product
Yes,
looks
yes.
like.
Yes, yes. This is what the product looks like.
Okay.
That
It's a
screen
doll.
is basically.
You're selling an AI-powered doll.
Yes, yes, ma'am. Exactly.
Okay. And what does this doll do? Does it talk? What does it do?
Ma'am, it talks, it walks with children, it makes stories with them, it makes giggles with them, it even make children in their education purpose also, and also interacts with them the whole day, where they have issues with their friends, even with the teachers, even with their parents as well. These all
That's
things
interesting.
Lino is doing.
Okay, so I think the way to pitch this story first and foremost is you should start with this image and say that we are building Lino, which is a doll that is going to be a companion to kids and do blah blah blah. Read stories, interact, etc., etc. So that's see how long it took us to come to this one. Did you understand? Anybody in the audience
Yes, yes.
understand what he was talking about? I was thinking, is this an iPad or So you don't want people receiving your pitch to be confused. You want to hit them between the eye with what is it that you're doing. So
Exactly.
so what segment do you want to launch this for?
We are going to launch it for 3 age groups in India. That
You
is
can't
for
launch
2 to
it for
5
3 age
years.
groups. You launch it for one age group.
The content for every age group is different. Like if a mother is selecting, she has a 3-year-old baby. 3-year-old baby for Lino will be only reciting poems and playing games with them, not on the education purpose.
So
But for 9-year-old,
the best way to go to market with something like this would be target the 3-year-olds. And then if you're going to charge for additional content, the doll stays the same. The family already has the doll. As the kid grows up, you sell them more content. It's a razor and blade strategy.
yes,
You
ma'am.
know the strategy, razor and blade?
Yes, sir.
You've already sold the razor, which is your doll, and then you sell them blades, which is content. That's the way
Yes,
to
ma'am.
that's the way to bring this product to market, I think.
Yes, ma'am.
Okay, let's go to your questions.
Yeah.
You have questions on the slides?
Yes,
or-
ma'am. So, ma'am, like the product is, India is already was very behind in form of toys, particularly was ahead
Yeah.
in manufacturing, but in particularly in technology, toys was very behind. But India is a huge market. Like for toys, like people were ready to spend, but the right products were not available in the market. The question lies is like, where should I first enter with India? Is it with the tier 1 cities where there is 1% of India lives, and also but in the tier 2 tier 3 cities of India, places where maximum population lives, but the spending power lies with the tier 2 tier 3 cities?
Well, this is just one of the segmentation questions. I gave you so many other, right? What kind of what household income level do you want to enter it at? What is going to be the price of this toy?
Ma'am, this product is going to cost around $120.
$100.
$120.
$120. So the doll is $120, and then the content is on top of that.
The content is different. Yes, ma'am.
So this is a high-end toy. It's going to be only affordable
Yes.
by very high-end.
Yeah,
So
which
you
which
need
which
to
which is
go.
actually weird because you started out by saying, you don't have affordable toys for people and families in India to use, but then your pricing is at the top 5%, right? So I think there's a bit of a mismatch in your messaging. And I think, and I think as you were talking, I was thinking like, this toy cannot be less than $100 because of all the stuff you mentioned. So it is priced, otherwise you'll be losing money on this. And hardware is expensive to do. Yeah, given if this is the price, and I don't think you can go much lower without sacrificing your margins or selling for a loss, and your marketing costs, are also you have to consider because that's where the biggest costs usually come in. I think, I would not go to tier 2 to tier 3 cities in India. I would look at, tier 1, and even within tier 1, you have to look at households, 2 families, both of them are working. So it's not, the primary caregiver is not at home all the time, right? You have both mom and dad working. They have access to, to high-end other devices so that they can afford this as well. So you have to segment it down to, disposable income, people that are working in tech, with any product, you have to sort of figure out, how do I get to my first X number of users and I get feedback and then I can go down. And then as you start selling more, your cost will come down, right? Because you have more manufacturing, more, economies of scale. I think, this is why hardware sales are harder, right? Because, and consumers especially are very finicky. It has to work well. And the kids are going to compare you to YouTube, right? Or other things, right? Because even a 3-year-old knows how to use YouTube, right? And they will compare you to that, and you have to be able to delight them. And so there's lots of work up front to make sure your target market actually will appreciate this product, right? So have you done any field testing so far?
So we did a pivot testing with more than 500 mothers, where we were just in an idea phase and we just wanted to ask them about the feedback of the product. So we were surprised to know about their feedbacks. Like we were targeting for selling the product for children, but we were surprised like mothers wanted the product for themselves first, to have their me time specifically, which they aren't able to get, particularly because they are continuously busy, not just with children, but after children, then their husbands, then their family routines, family duties. So we were surprised that they need the product and they were ready to spend also. Like we told them that if the product comes around $120 or $100, they were ready to spend. Yes, product is $120, but we have a plan to in next 3 years to launch 4 more products with the similar content in every different content in every product, but that products would be ranging from $100 from $20 to $80,
But
with different
how
specifications.
can you produce something like that at that price point? Have you done the design to see that you can produce such a product? Can you build such a product at that price point?
Yes, ma'am. For example, ma'am, for a teddy bear, even in USA, there are some brands. In China, they have already launched just a locket a teddy bear is wearing, and they are just interacting with children, making just stories and making interactions at the time of bedtime. That's all.
Yeah,
So
but that's
this is the
different.
starting device.
That's different. That's very different.
So that is the starting product that we are going to launch while giving content. For in the full Lino, that is a $120 product. Lino can walk. Lino can do a video call with the parents who are working. But when we are comparing it to the $70 product under Lino, that product cannot walk. That product cannot
I don't
make a video call.
particularly like this. I don't particularly like that strategy. I like the strategy of the razor and blades, where you have a product that goes in, establishes itself in the family, and you sell content on top of it. That feels to me like a technology business. The rest is this is not a technology business, and I don't know how you plan to finance it. I don't think you're going to be able to finance it if you do it like a random product kind of stuff. Okay. All right. So let me just check with Maureen. Maureen, Aman is not in the room, correct?
Simona, I have to take leave. I have a board meeting starting right now.
Thank you for staying, Manu. It was great
Absolutely.
having you, and your comments were very nice and very insightful. So I'll see you next week.
All right. Take care. Bye,
Bye.
everyone.
I'm going to skip through Aman's slides. I don't think Aman is here. So let me give you a quick summary of how to use 1M by 1M, and then you can ask more questions. We will have a little bit of time for more Q&A. So line up your questions. I'll come back to you in a moment, but let me just explain to you how to use 1M by 1M. So as you can see, everything, by the way, 1M by 1M is a completely virtual program. Everything is available from 1mby1m.com. And once you become a member of the program, you're going to be brought into all kinds of virtual events. So you can access 1M by 1M from anywhere you want. The premium program is our full acceleration program. It's a 1-year membership program, and you can renew that membership and can use the program for as long as you want to. We emphasize greatly on bootstrapped entrepreneurs. That our philosophy is bootstrap first, raise money later, or not at all. If you don't raise money, that's fine. If you want to raise money, we would want you to bootstrap first and then raise money. Off the bat, blitzscaling is not something we do and we encourage, because we don't think that is a good way to build a business. Until you know what business you're building, if you raise a lot of money and then fail to deliver 0 to 100 million in 5 to 7 years, you fail. You go out of business, and that's not the way to spend invaluable years of your life, okay? If you want to access the curriculum, the 1M by 1M curriculum, that is also available through 1M by 1M Basic. And we have, many thousand hours worth of curriculum organized into core and electives. Within the electives, we deal with different segments, sectors. There is, AI, there's healthcare, there's education, there is, a variety of different topics that you can learn from. But the core curriculum is the methodology of how to put one foot before the other in building a business. So go to the website and look at what to expect from 1M by 1M Basic, 1M by 1M Premium. Some of you are obsessed with stealth and one-on-one private consulting, and that's fine. It's available. It is much more expensive. It's $1,000 per hour, whereas premium is $1,000 per year for unlimited access and weekly roundtables. So free roundtables, if you have pitched already, you cannot pitch again at a free roundtable. You need to go to the premium. But if you haven't pitched and are planning to pitch, there are many slots available. 2 more in May, 4 in June. So please book your slot and let Maureen know. Maureen will work with you to get you scheduled. If you have questions about the program, your contact is Irina Patterson, irina@1mby1m.com. So if you have other questions, I can take more questions now. Anybody?
Yeah.
Yes, Bharat, please go ahead. Yeah, go ahead.
Is it? I'll go.
Go ahead.
Just going back to the question, Shramanav. So where we are, right? There are 2 things. You did mention synergy around tools. The interesting thing that we are seeing is that while we're building a lot of accelerators for our own use, right, as an AI company, for example, we have an AI manager that chats with everybody, gets daily updates, which is remote, like middle management, almost entirely for us. We have all of our AI interviews are AI interviews. Like we're definitely leading with respect to voice, and end to end. We've implemented the entire Google structured interviews using AI. And then there is a human component just at the end. So we are seeing that all of these accelerators might also be actually products outside. So, and we built a tool that actually sits on top of, Cursor and all of the AI tools that helps accelerate our development as such as well. And we are continuing to expand. So we're seeing this 2-sided, the accelerators that we build for ourselves inside, and then the accelerators that we're building for our clients, like for example, as I said, like say email cleanup. And
so whatever, let me answer. I know where you're going with this.
Yeah.
The key thing to keep in mind is that whatever quote unquote product that you are going to bring to market is going to have its own competitive landscape, and you're going to have to position against that competitive landscape and win.
Yep.
And you can't do that with 15 products at once.
Got it.
You're going to have to pick one product.
Mhm.
And the thing that you have going for you right now, which is really unique and really valuable, is you have 29 customers spending $100,000 to $200,000 each.
Yep.
So you have customer relationships that are deep. You have visibility into customer problems that are unique. So to the extent you can leverage those relationships, that perspective, that visibility into customer problems, and find a problem that is recurrent and solve that problem and position your product business around that problem, that is the best way to build a product company.
Got it.
Okay?
Yeah. Great insights.
Yeah?
Thank you so very much.
You're
That was
welcome.
my only question.
You're welcome. Bharat?
Yeah, ma'am. So I wanted to ask, like you said, that going with one product and developing, giving more and more content on that part. So because I have also watched like 2, 3 companies like Roy got Cosmo got sold out, and even like the one big company in India like Miko, which is also doing a very fantastic job in terms of this.
Yeah, but they're
But
much bigger companies. You're just starting out. I'm
yeah,
not saying that forever
yes,
you're
yes,
going
yes.
to do that.
Okay.
You need to
So
start with something, and you need to start with one product. You cannot start with multiple products. You will not have the money to build
exactly, ma'am.
and market multiple products. You have to build one product. And then just in terms of business model, I think if you build a product that goes into a family with a 3-year-old kid, and they keep buying additional content for that particular physical product over the lifetime, let's say 3 years to 12 years, that is a very interesting business model.
Okay.
And
So
it
I should
limits
be
it kind of makes it very, very specific that you're building a product for a 3-year-old in the high-end families, in the families with big, very serious disposable income, who want to invest in something like this, who, the tech industry most likely is where you're going to win this kind of customers. People who are tech savvy and are comfortable with their kids playing with tech toys and stuff like that, and then they're going to be able to buy all the content as the kid grows up. So you're basically developing an incredible lifetime value of a customer. Customer acquisition is expensive. Lifetime value of a customer, if you can have a 12-year lifetime value of that customer, that is a very valuable, very, very valuable customer acquisition. And then you will see what kind of numbers it comes out to be. That to me, based on what you presented, that stood out to me as an interesting business. Just selling random, highly replicable toys is not an interesting business.
okay. So I should be sticking to just Lino for right now and just selling content over years. Yes, we have planned to sell content, but to give the content every year so that a child and family stays with us for every year. The content we keep on indulging so that our content is also not limited, like where children also are again switching to in any other application or any other device. Like
So basically,
we should be indulging in content.
this makes your business primarily a content business. You have a device that you're selling. It's like the iPhone, right? You take the iPhone, you buy the iPhone, and then you buy content on top of the iPhone, apps, etc., etc. So, but the device lasts multiple years.
Exactly.
So that's what I would do with your business.
Thank you for your beautiful insight, ma'am. That's very much clearing my mind right now. Like where
You're
should I
welcome.
focus? Thank you very
You're
much.
welcome. And you're all welcome to join 1M by1M. Happy to, keep working with you and giving you guidance on an ongoing basis. You're most welcome. All right, folks, that's it for today. I will see you next time. Those of you who are coming back or coming to pitch for the first time, and good luck with everything.
Thank you very much, ma'am. Thank you.
Thank you very much.